Welcome to Digital Accounting Education, a channel that strives to make accounting and EMS easy for you to understand. Please don't forget to subscribe so you do not miss any future videos. So, in today's lesson, we are going to talk about credit transactions. When we talk about credit transactions, there's a few terms that I would like for you to understand so that when they come up in activities, you know exactly what they mean. The first term is credit. What is credit? So, credit is when you are allowed to buy now and pay later. Okay, so for example, let's say you go to a tuck shop and you buy bread, but you tell the seller that you do not have money to pay for the bread right now, and they say to you, okay, it's fine, you can pay me tomorrow. That is credit. So they are allowing you to buy now but pay later. Second term that I want you to know is credit transactions. Okay, so credit transactions basically just refer to when a good or service is given now but the payment is delayed. I'm just going to give you another example. So let's say Peter goes to game. Okay, here's Peter. He goes to game stores to buy a cell phone, and he does not have money to pay for the cell phone now, but game stores allows him to take the phone home and then pay it over a period of 12 months, which means every single month what Peter is going to do is he's going to take out an installment on that phone, which is a portion of the amount he owes for the phone. So that is what a credit transaction basically refers to. Third term I want you to know is a debtor. So now, what is a debtor? A debtor refers to a person or a business that buys on credit. So in this case, Peter Peter is the debtor because he is the person who buys on credit. He's this person that bought the phone on credit. The reason why we say it's a person or a business that buys on credit is because businesses also buy on credit. They buy their stock on credit, sometimes they buy their furniture on credit, and anything else that can be bought on credit they may buy on credit. So that would make them a debtor. Fourth term that I want you to know is a creditor. So now, what is a creditor? A creditor refers to a business that sells goods or services on credit. So using the same example of game stores, we said Peter is a debtor because he is a person that bought the goods on credit from game stores. So now that means game stores is now our creditor because it refers to a business that sells goods or services on credit. Game store is that business that sold the phone to Peter on credit. So that makes game store a creditor. The fifth term that I want you to know is account. So now, what is this account? An account refers to a record of what the debtor owes to a creditor. So when you want to buy on credit, you're not just going to get up and get into a store and buy something and then tell them you will come back to pay. You first have to open an account so that the business can have a record of what you actually owe them. Okay, so they need all your details so that they can know for sure that you can pay them, you afford to pay them, and they can keep a record of when you come and buy on credit and when you pay your account. So if a transaction says Peter came and bought a phone on account, it means that Peter came and bought the phone on credit. It means the same thing. So number 6, I want you to know what an invoice is, or a credit invoice. So with a credit invoice, what it actually means is a document on which credit transactions are recorded. So when you go into a store to buy on credit, they will give you an invoice. So that is the document where they record only credit transactions. Okay, so when you buy on cash, usually what they give you is a receipt. When you buy on credit, they will give you an invoice. So just to recap, a credit or credit transaction is when you buy now and then you pay later, meaning that you are creating a debt for yourself. Okay, and then a debtor is someone who buys on credit. They are the one who owns that debt to the business. And then a creditor is the business that sells on credit to a debtor. And then if you buy on credit, you are actually buying on account. And then an invoice is what you get as a receipt. It's the form of receipt. So it's the type of receipt you get or you receive from the business after you bought on credit. I hope this was easy for you to understand.